Hi friends, welcome to Adda 24/7. We are in the Sankalpa series for BFM. In this we are covering MCQs plus numericals plus case studies plus theory questions. Okay, so follow this series completely. Today we will be covering module C questions. Module C, C and D. C in fact, mainly C. Here we will be covering the liquidity part. Liquidity risk is an important risk in your BFM. Okay, so we'll be covering this treasury management, module C and liquidity part. Okay, so let's start. We'll be covering the objective questions only today. No numericals, no theory, anything. Only objective questions. Which of the following exchange operations have been useful in treasury management operations? So which of the following foreign exchange operations have been useful, okay, for treasury, useful in treasury management? So treasury management is arbitrage and swaps. Now you can definitely answer this here. Looking at this at the CAIIB level, you can definitely answer me. Yes, sir. Yes, sir. Yes, sir. Answer will be what? Let me see what is the comment section. In the comment, what are the answers? I know all of the answers will be what? C, right? All of the answers are C. I know. But the problem is, do we understand arbitrage and swaps? We have just heard the names. Do we understand this? How many of you understand this arbitrage? How many of you understand this swaps? Type yes in the comment section. And if you don't, kindly type no. Not an issue. I'll explain you both. Okay. Arbitrage also and swap also in simple language. Okay. What is arbitrage? Arbitrage is basically buying in one market. I'll write it simple. See this. Buy in one market and sell in another. Immediately. Sell in another. Immediately. Very important term is immediately. Okay, immediately. This is an important term. Immediately, because everyone does the same thing. Buy somewhere and sell somewhere. That's business. But immediately is an important part. Means I'll explain you one simple example. Suppose if I'm having, let's say in India, how many stock markets are there? How many markets are there in India? There are two markets, right? NSE and second is BSE, right? BSE. Okay. Many a times what happens, there is a difference in prices. For example, let me show you Infosys. Let's say Infosys. Okay. Infosys. If Infosys price on NSE is, let's say I'm taking example, let's say it is 1000. And on BSE at the same time, it is, let's say 1003. Now this difference on NSE and BSE remains for hardly, I'll tell you, 4 seconds. 4 seconds, hardly, not even 4 seconds nowadays. With the technology, it is hardly 3 seconds max to max nowadays. It immediately gets converted or collapsed. Okay, it matches with each other. Now, if I am the arbitrage person, what will I do? Do you know? I'll buy, let's say 1 lakh shares, 1 lakh shares. Okay, of Infosys here at the same time, right now. And I'll sell 1 lakh shares at BSE right now. Here I'll sell and there I'll buy. What happens? At the same, in hardly 4 seconds, I'll do all these jobs. My computers, my internet needs to be very fast in this. Okay. So what have I done? I've earned 3 lakh rupees. 3 lakh. See this, 1003. 3 into 1 lakh. This much I've earned in how many? 4 seconds. That is arbitrage. Buying in one market and selling in another market immediately. That's why arbitrage is the most important and the safest transaction. Safest. But it is safest subject to the timelines. If you are able to follow the timelines, then it's safe. If you are not able to follow the timelines, you are gone. Okay. So that is arbitrage. Now what is swapping then? Swapping, remember, only you remember one basic about swapping. Swapping means always there are two legs in swaps. Always there are two legs. Okay. One is fixed and other is floating. Okay. Floating. What do you mean by this? Keep it very simple. Suppose I'll give you this example over here. Okay. So suppose if I take 1 lakh rupees from you, 1 lakh. Okay. And guarantee you 7% rate of interest. 7%. Here I am taking it from you. So I have to give you 7%. I have to give 7%. And what do I do with this 1 lakh rupees? I invest this 1 lakh rupees in the stock market. Now in this stock market, this 1 lakh rupees I may get at the year end. See here, 7% is for the year. So at the year end, I may get 25% returns also, because after all it's stock market, it can give you heavy returns. Or I may get 0% returns also. Or I may get minus 25% returns also, negative also. Stocks might go down also. So this is what? This is floating and this is fixed. So swap always has two legs. One is fixed, another is floating. Now the swap can be of various types. It can be currency swap, it can be interest rate swap, it can be any swap, commodity swap, anything. But logic remains the same, fixed and floating. Okay. And one more important term about swap is it's a exchange of series of payments. Series means, example, I'll give you RD. What is RD? Recurring deposit. It is a series of payment. I'll give you 1000 per month, and at the end of the year, you as a bank will give me whatever 12,000 plus that interest. Right? So it is a exchange of series of payment. Everyone got this? Swap and arbitrage. Very important terms. These are the derivative instruments. There are almost 7 derivative instruments, 7 to 8. That's why I'm saying join the classes, paid classes, because everything is I won't be able to cover it over here. Okay. There are many others, FRA, forward, future. Okay. So we'll cover it in the classes. Okay. So now the answer is A and B both. You got it, everyone? Type yes in the comment section if you have understood it. Everyone. Type yes if you have understood it. Okay, move on. Chalo, next one. Risk in the trading securities may arise from the following activities. So risk in trading securities. Securities means what? It can be anything. It can be shares, it can be bonds, it can be anything. Forex, then equity holding, lending and repos, and all of these. So securities may arise, risk in this trading may arise because of what? It can be due to Forex also. It can be due to equity also. It can be due to repos also. The repo rate also keeps on changing. Right? So the answer is, what is the answer? Correct answer over here? Comment section. Answer is A, B, C or D? D. Correct? Risk in trading securities may arise from the following activities: exchange, equity, repos, all of these. Which of the following is not an agency service of the bank? Agency service. Okay, now this is a simple question. Extending credit, escrow, merchant banking service, and insurance selling. It should not be an agency service. You want not. Okay. Agency means what? In this product, the bank will get a commission without any risk. Look at this. Agency, the main point about agent is agent. Any agent. We see that LIC agents, we see this mutual fund agents. What is the rule? They have twofold rules. One is commission. They get the commission. Okay. And second is no risk. They don't have any risk. Agent's role is only agent. Agent just plays as a middleman between that company and you. So if tomorrow something happens, the agent will directly point out to that company. Go there and solve the issues. So no risk. So that's why when your bank acts as an agent, it also gets 2 points over here. Commission and no risk. So in which of them it is not the agency commission, means which is agency service, or which is the core banking service? Core banking service is this, extending credit. It is not the agency service. Escrow is an agency service. Escrow means what? It's a temporary account. Temporary account. It is opened generally when there is a project to be done between two companies. Okay, so that is an escrow account. Merchant banking services. So this is also agency service. Your bank gets a commission. Where do you get merchant banking services? We generally give this in IPO. It doesn't come to you at a retail level. It goes at a corporate level. Insurance selling. This comes to you. You also do the same thing, right? So not an agency service is extending credit. Everyone download Adda 24/7 app on your mobile. In this app, you'll be getting the premium study material, plus live classes, ebooks, tests, Whatever we require for clearing JIB and CIB, we'll be getting it over here. Okay, so that's why download it right now. Okay. What is the off balance sheet risk? Look at this, off balance sheet risk. It is contingent in nature. It can occur on account of issue of guarantees, committed credit lines, and issue of LCs. Bank's commitment may happen on account of failure to meet the payment obligations, and all of these. So now let me get the answer from you first. What is off balance sheet risk? Is this A or B or C or D? All of them. Yeah. Answer is, everyone, the answer is D, all of these. Okay, all of the above. Remember, off balance sheet means what? Which is not shown in the balance sheet. What is not shown in the balance sheet? Contingent liabilities are not shown in the balance sheet. Contingent. Okay. Now, what do contingent liabilities include? Contingent liabilities include bank guarantee, BG, LC, court cases. Court cases are also contingent liabilities. Okay, court cases. So these are the three main contingent liabilities. So off balance sheet risk means contingent in nature, can occur on issue of guarantees, and bank's commitment may happen on account of failure to meet the payment obligations by that party. Means, what do you mean by this third part? Third part means, suppose if my bank is giving the guarantee and if that other party does not perform, then my bank will have to pay, isn't it? So that's known as bank's commitment may happen. May happen means crystallization. This is called as crystallization. When the risk which you have just given in words, when it comes for payment, that is known as crystallization. So answer is A, D. Okay. Which of the following statements is correct? Always check the question. What do they want? Correct or not correct? Okay. The funding risk may arise from the need to replace the net outflows due to unanticipated withdrawals of deposit. Unanticipated. Funding risk means what? Funding risk means I may not have the regular funds which are required for my regular payments. Why? Because unanticipated withdrawals. All the customers of the branch come for withdrawal of money. All of them. So that is unanticipated withdrawal. This happens when, what is this term called as? When all the customers come to withdraw the money in the bank. All the customers. That is known as, one concept is there. That is known as what? Anyone? It is what? It is called as run on the bank. This is the important term, run. I'll write it over here. Run on the bank. Run, or they call it bank run. That's simple. Bank run. Okay. So this funding risk may arise due to this. Let's see. The time risk arises when the performing assets turn into NPAs. So my performing assets become NPA. So time risk means what? On the required time, I may not get the payment. On the required time, I may not get the payment. So that is time risk. Call risk arises due to crystallization of contingent liability. Just now we saw it. First, earlier question. If I give you a guarantee, let's say this is a bank. Okay, bank is, it is having one customer, contractor. Okay. Now this contractor wants some road, state government. It wants some road contract from state government. So state government will ask for guarantee. Okay, so bank gives the guarantee. Now this contractor does not build the road. Okay, does not perform. Then the state government will ask the bank for payment. So bank will have to pay. This is known as crystallization. So this is, which of them is correct? Call risk arises due to crystallization of contingent liability. That is also true. So the answer is what? Call risk, time risk, and funding risk. What is the answer? Isn't it? It's all of these. All of these, right? That is the correct answer. Everyone subscribe to Officers Adda 24/7 YouTube channel. In this channel, you will be getting the latest updates on JIB and CIB from IIB. Number one, there are two things which you will be getting. But first is this updates. Now, what are the updates? Updates can be like, for example, change in venue on the last moment. Change in the date of the exam on the last moment. Some change in the portion, last moment. Type of questions change, last moment. IIB gives regular updates, okay, at the time of exam. So for that, You should follow this Officers Adda 24/7 YouTube channel. You get it over here. So first one updates, you get updates. And second is free YT series, YouTube series. Okay, second is YT, free YT. Right now, what are you watching? Free YT series. Right now, you are watching the same free YT series, YouTube, right? So similar YouTube series, you get it on all the subjects. Okay, so that's why subscribe to this channel, click on the bell icon. How to do this? See this. We have 3 to 4 channels. I would suggest you join all the channels. One is on Telegram. Scan this blue code. Scan it right now. One is this black code, that is for YouTube. Okay. Then third is Instagram. Scan this Instagram code also. And there is one more. That is WhatsApp channel. Nowadays WhatsApp channels have started. Do you know? How many of you know that WhatsApp channels have started? Type in the comment section yes. How many of you know that WhatsApp channels have started? In the comment section, type yes, everyone. How many of you know this? WhatsApp channels have started. Do you know it? So, yes, WhatsApp channels have also started, and we are already there on WhatsApp. Okay. So just type Adda 24/7 on WhatsApp and you will get it. Okay. Next one, the features of interest rate risk are. Features of interest rate risk. Interest rate risk are. It is an exposure on the bank's financial condition to adverse movements in the interest rates. So exposure on the bank's financial condition to adverse movement. So exposure for adverse movement. If the things are going against me, then it's an interest rate risk. Obviously, if the rate of interest is going against me, then it will be a risk. If it is going in favor of mine, then no risk. Isn't it? It has no effect on the net interest margin. No effect. Okay, it has no effect on NIM, net interest margin. What is NIM? What is the formula for NIM? Everyone type in the comment section. Do you know what is NIM? Formula for NIM in the comment section. Yeah, it is NII. NII divided by NII divided by assets, performing assets you can call it, or just call it assets also, it's okay. Performing assets, that's the right word. NII upon performing assets. Now what is NII then? NII means this interest, I'll just write it short. Loan interest which I get. Here, loan interest I receive minus this deposit interest. Deposit interest. So that is difference is known as my NII. Okay, that is my income, isn't it? This is my income of the bank. How does the bank earn? Bank gives loan and gets interest, and takes deposit and gives interest. The difference is the income. So that is NII. This NII, when I divide it by the performing assets, I get NIM. So no effect on the NIM. It may not affect the market value of the equity. It may not affect the market value of the equity and all of these. What is the answer? All of these? Because all the answers earlier were all of these, and that's why this also all of these. Don't follow this concept in your CAIIB. CAIIB is not all of these, none of these. It's not compulsory that these answers will be there. The correct answer over here is A. It is an exposure to bank's financial condition to adverse movement in the interest rate. It has an effect on NIM. It may affect the market value of the equity. Okay, that is the point, correct one. Which of the following is not a mismatch risk? Mismatch means what? Mismatch. Let's see. Okay, and we want not. Okay, this is your important question. Not a mismatch risk. Holding assets and liabilities with different maturity dates and amount. So assets and liabilities with different maturities means I am having deposit of 1 year and loan of 3 years against that deposit. Okay, deposit of 1 year for 1 lakh, let's say 1 lakh, and I am having a loan for 3 years for the same 1 lakh. So it will be a mismatch. So I want not a mismatch. Is this a mismatch? Okay, just type in the comment section yes or no. Is this a mismatch? Holding assets and liabilities with different maturity dates. Is it a mismatch? Yes. So it is true. I want false here, not. I want false. So this is true. Now what about the second one? Adverse movement in the interest rate. So adverse movement. Okay. So adverse movement in the interest rate means due to the loans and the deposits. If the interest rate moves in the adverse movement, then definitely it's a risk for me. Third one, let's see. B, keep it on hold because it can be the answer. When the liability is repriced on the maturity date and this causes variation in the interest rate. Now, is this the point? Means liability this is repriced on the maturity date. So repriced on the maturity date means what? When I am having the maturity, this liability means what? For the bank, what is the liability? Liability is the deposit, right? So this deposit is repriced. If the deposit goes against my favor, if the deposit interest rate has increased, so that there will be a mismatch between the interest rate of the loans as well as on the deposit. So my NIM will affect. NII will be affected, and in further to this, NIM will be affected, net interest margin, right? So this is definitely a mismatch risk. So this is also true. True. This is also true. But I want false. So now we have to check the closest false. All of the above is not possible because these are not the mismatch. These are the mismatch risks. So A and B are the mismatch risks. So all of the above is gone. So which is the nearest one? Adverse movement in the interest rates. So this is not the mismatch risk. Now what is the logic behind this? You will say, sir, it can be the mismatch risk. Yeah, I have told you it can be. But I'll tell you how to explain this. See this. If loan, look at this, everyone pay attention. Loan, okay, and second is deposit, okay. Now, if my loan rate is, let's say 9%, and my deposit rate is, let's say 7%, then what is my NII, net interest income, NII? My NII is 2%, 9 minus 7, 2%. Now, imagine both of them go down. Both of them decrease. So both of them become what? 8%, and this becomes 6%. Same proportion. Then also my NI is 2. Okay. So that's why it is said over here, adverse movement of the interest rates is not a mismatch risk because it is happening in both of them. Now if it happens in one of them, means this decreases but this does not, or this decreases, this does not, in that case that is called as a basis risk. Basis. Okay, in basis risk, then you'll be having the mismatch part. But here is anything mentioned about the basis risk? No, it is mentioned adverse movement in the interest rates. So it is for both. So that's why this is a false answer, and it is not a mismatch risk. Okay. What is the yield curve risk? When two different instruments maturing at different time horizon for pricing assets and liabilities. So different instruments maturing at different time horizons. So that is the yield curve risk. Yesterday I had given the details about this yield curve. Follow yesterday's video. There may not be parallel movement in the interest rate of both the instruments. That is also true. Means 10 years bond. See here, example. 10 years bond will change in different proportion. Whereas to 1 year bond will change in different proportion. Interest rates. Okay. Non-parallel movement in the yield curve may affect the NII. So that's also true. Non-parallel movement means this is changing differently, this is changing differently. So net interest income will be affected. So the answer is all of the above. Okay. Yeah. So now everyone, before going, join our Power Pack revision batch for the CAIIB November exam. Okay. All the numericals are covered, objective questions, case studies, all the compulsory subjects, all are covered. You can join the Mahapack also. In Mahapack, you are getting multiple batches plus ebooks plus tests. Okay, I'll show you how to join this. Go to Adda 24/7 here. I'll always suggest you to go through the app. In the app, you get coin systems. Using that coin system, you will gain around 1% extra. So now, what is going on right now? 80% off is going on. But if you use the app using the coins and you go on collecting the coins, then you will be gaining 81%, 1% extra. Okay. So go to Adda 24/7, click on JIB and CAIIB, click on CAIIB November 23. Click. Now you will see this promotion batch. Okay. This Power Pack revision batch. Click on this revision English batch. Okay. See this. All the 4 subjects are covered. You can see the ebooks, videos, test series. Click on the ebooks. You will see subject wise ebooks. Click on this subject wise, each subject. You will see chapter wise ebooks. Okay, so things are to that level. Chapter wise questions are given. Plus test also. Click on this test. You will see this prime pack. Click on this prime pack. It's a part of this only. Okay, it's a part of your test series. So you will see mock tests. Module wise mock tests are available. So at that level we have gone. So that's why it is the most beneficial for you. In fact, I would suggest, and look at the fees, 80% off. Okay, Joy 80 code. It's already applied. See here, click on buy now. See, the Joy 80 code is already applied. 80% off is already applied. If not applied, then you can just apply it. Click on continue. Fill in your details, full name, phone number, email, and make the payment. That's it. So immediately join the batch. See, just now the batch is started and many more topics are yet to come. So that's why join it. And also, as I told you, Mahapack. Click on Mahapack. Join the Mahapack. Look at this. In Mahapack, CAIIB Mahapack. You'll see this. CAIIB Mahapack 2.0. Click on this. Now you are going on with double validity. Now double validity means what? 80% off you are getting, obviously. But along with it, you are getting double validity for the 6 months and 12 months package. So for you buy it for 6 months, you get it for 12 months. You buy it for 12 months, you get it for 24 months. Okay, so double dhamaka, double validity plus 80% off. Again, ebooks are available, videos, test series, everything is available. Expert faculties, interactive classes, recorded videos. What all do you want? So join fast. Okay, I'll be back tomorrow with another series. Till then, keep studying and join the batches ASAP. Okay.